CD rates. Today's highest CD rate of 4.6% is offered by Newtek Bank on its 9-month CD. Fortune monitors the top rates offered by leading U.S. financial institutions to help readers obtain the best possible return on their CD investments. Established banks like Chase, PNC, and U.S. Bank prioritize attracting customers through more lucrative products, such as loans and credit cards, rather than CDs. Consequently, CD interest rates offered by these banks are often lower compared to those available at smaller regional banks or online institutions. Additionally, securing a competitive rate at these larger banks may necessitate opening additional deposit accounts or meeting higher minimum deposit requirements. How to get a good CD rate? Determining what constitutes a good CD rate involves finding a balance between securing the highest available rate and your willingness to keep funds locked away for a specific duration. For instance, choosing a 5% APY CD over 5 years might not be ideal if you expect to need access to your funds sooner or if interest rates increase, potentially lowering your overall returns. Generally, rates that exceed the national average are considered advantageous. It's crucial to compare rates across different banks to find the best option tailored to your specific financial goals. Key factors to consider when comparing CDs include term length, ensure it aligns with your savings objectives and time frame. APY. Higher rates are typically offered for longer terms. Minimum deposit. Verify that you can meet the required initial balance. Penalties. Understand the costs associated with early withdrawal before maturity. Deposit insurance. Confirm that the bank is Federal Deposit Insurance Corp., FDIC, or National Credit Union Administration, NCUA, insured for deposit protection. Additionally, online banks often provide higher interest rates, but be mindful of any minimum balance requirements and associated fees. Opting for a bank rather than a broker can sometimes help avoid unnecessary charges. Look into offerings from online banks. Online banks and fintech companies often offer more competitive rates compared to national banks. Large financial institutions primarily derive revenue from interest on loans, fees, and investments in securities. Meanwhile, smaller banks and online fintech companies attract customers by providing competitive APYs on deposit accounts. Furthermore, online banks typically operate with lower overhead costs, allowing them to pass on better rates to their clients. Set up a CD ladder. CD ladders appeal to savers who prefer flexibility without committing funds for extended periods. By diversifying savings across CDs with different maturity dates, you can balance short-term accessibility with higher long-term interest rates.